All right, ladies and gentlemen, I hope you had a wonderful weekend. I hope you got a lot of rest because we have a wild week ahead of us. And where it starts, the first thing, it happened Friday after hours. There was reports that the FDIC was placing First Republic under receivership, aka that means the bank has failed. And well, yeah, it's true. Over the weekend, we've been hearing there's a bunch of banks that are going to be bidding on the assets, but now we're going to have to deal with that fallout. But surprisingly, that's not the biggest focus this week. It's going to be Jerome Powell, and that's why I got the hammer, baby. You know, it's Jerome Powell. You guys remember? Honestly, it's a very bad representation of Powell, and maybe I could remind you a little bit of the history, but, you know, up until 2023, every little rally, you know, like on the chart, Powell would just be hammering it down. You know, the Powell, you know, we would be going good, and then he would just come in sounding extremely bearish and hawkish, but since 2023, Powell has been surprisingly bullish, and really, that's what we're going to talk about today. I want to go over what is expected from this Fed meeting. We're going to talk about the pause and what it really means, and kind of just leading up into this moment, now tying it in with another bank failure, what we get here on Wednesday. That's when we get Jerome Powell. It is going to be very important. Is it going to be the most important? No, that's probably going to be next month, because next month, well, it's going to be middle of the year, and then we get summary of economic projections. So, Chad, we got a lot to talk about. We still got a bunch of earnings. Here is the list for this week. You got everything from AMD, Qualcomm, Apple. That's going to be the main event. Shopify, Coinbase, Ford, what else? Travel, Booking, Win. There's a bunch of other companies. Not Win. What was it? MGM, Caesars, all of that. And I even have a play related, but we still have big earnings, and there is a lot of companies. So, Chad, we're going to cover all of that. I got one play for you. We're going to go over Powell, everything else, and that's all. So all I need from you, like the video. We're going to be live on stream, even live for Powell, youtube.com/the stock market. But today is Sunday, tomorrow is Monday. This is the random account generator. We need your help, please and thank you. What we ask is you post a random option trade, keep it below $100, post it below in the comments, strike price, expiration date, all of that, and we are going to pick it in the morning. But Chad, let's get into it. Let's talk about Jerome Powell. So the big deal about this Fed meeting is that people are expecting that this is going to be where Jerome Powell announces that we are going to be pausing rates. If you've heard about a rate pause and people getting bullish about it, well, this is what people are expecting. If it's going to happen, it'll probably happen this meeting. Now, let me explain why to you. Do I agree? No, I do not. But the other part we got to factor in now, and what makes this closer to an imminent pause announcement, is literally what we just got on Friday. You have another bank going under, and that has its own credit tightening effect that is equivalent to a rate hike, more or less, or so they say. But that's the thing. But let's go back a little bit now to remember what happened at the last Fed meeting. We were freaking out about it. I gave you the big update. Remember, it was in the midst of SVB, but the Fed came out, they raised the rates even though SVB collapsed, but they did one big thing, and it was changing their language. They said, or they used to say, we are expecting ongoing rate increases. At the most recent Fed meeting, they changed that to some policy firming will be needed, aka instead of ongoing rate increases, they said some additional firming. That is what got people so excited and hoping for a rate pause at the last meeting. So now this is why people are hoping at this meeting Powell gives signals of a pause, because last meeting they made signals of how they're going to slow down, and now the rates will finally be above 5%. It's almost near where core CPI is, but also we have banks failing and all of that, and maybe now this is where Powell says, okay, let's raise one more time and then start to guide for a pause. Not to mention, a lot of other countries around the world have paused. Even this week, we are still even going to be getting the ECB, and everybody's debating whether they do a quarter or half a basis point. But the whole point is, Powell, we saw changes in a slowdown of policy last meeting. People are hoping that continues with everything going on, and if he does, that will change the whole landscape moving forward for the rest of the year. And the bond market, which has already been catching a bid and pricing into this, again, the dot plot where the Fed says we're going to be and where the bond market says we're going to be by the end of this year, if Powell does pause this meeting, then this actually makes sense. Otherwise, we're probably going to see a lot more volatility in bonds. So that's the rundown for this meeting. That's going to be on Wednesday. I'll give you updates ahead of that. But now my take leading into what we have on Wednesday, I think Powell is going to keep the statement the exact same. I think they're going to keep the phrase some additional policy firming. I think they're going to raise rates by a quarter basis point. However, I do think Powell is going to answer the questions more dovishly. So I think statement stays the same. That will be a little bit more hawkish. But I think when he answers questions, I think he's going to communicate how they're closer to the pause given what's going on. But they wanted to give themselves a little bit more wiggle room, or maybe they'll bring up unemployment. So that's the rundown for Powell. But now we also have a lot of economic data. I was just saying unemployment Friday after Powell, 2 days after Powell, we get the non-farms tomorrow to start off the week. We are going to be getting ISM manufacturing. Remember, a lot of the data has been contractionary. So a lot of this stuff can move the markets in addition to earnings, but then it's really going to come down to Powell. So besides that, the other big story, it's going to be about these banks. We're going to see how it plays out. But now, given that we're so close to Powell, I think it's going to be respond to Powell. Once we get Powell, then you're going to get Apple earnings, I believe, the day after. Then everybody's going to take it as a whole. And then I think we might see the market move as a wave as we get into the middle of the year, because it's about to be May. So, Chad, that's the breakdown. Let us talk about some plays. That sounded so weird. So why is it so formal? Let us talk about some plays. Okay, anyways, I do have a couple of plays. One on Friday. This is related to what's going on with FRC and the banks. Remember, I was short on the 2-year. Then I closed it as we were starting to talk about what was going on in the bonds. Then Friday after hours, that news about the receivership came out. I bought the 2-year futures and I bought the 10-year. Very, very simple idea. I am going to buy the bonds up until Powell, because if Powell does keep the statement the same and kind of gets the market looking ahead and that he does prove he's going to go slow, I think the bond yields are going to go back higher, aka bonds will come down. So that's where I do not want to hold these bond plays. What I'm trying to tell you, I'm going to play the bonds, buy the 2-year, buy the 10-year, sell out before Powell, then after Powell, either short it or go long again. But the reason why I bought the bonds, another bank going under, and right here, that little pop right there, that was the last time we started to get any other banks going under or getting FDIC receivership. Everybody started flocking to protection. So that's the logic, but Powell will be the only X factor. I think that is going to be one very good play, but that's not the first play. The second play, or the main play I'm going to be going over here, is Airbnb. So you should already know I love this. I'm very biased. We have it in the long term. Yeah. But what I'm looking to do with it, play it, flip it before earnings, because there is a ton of travel names this week, and it's all ahead of Airbnb. Airbnb doesn't even report this week, but you got like 3 other casinos. Then we're going to be getting booking on Thursday, and I think this could be a great environment for the run up there, and then we don't even have to gamble on the earnings, and then we'll see how travel is. But for the most part, most of them have done good so far. Other than that, playing a couple of earnings, watching the bonds, then after Powell, I'm pretty sure we are going to start getting a lot of action. So, Chad, get ready. You've already made it to May. We got to keep moving. And they say sell in May and go away, but sometimes it's the beginning of the month, sometimes it's the end of the month. So we will see, but that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, don't get cursed by the morning. You got to wake up and drive, baby. Come with the hype, come with the energy, and whatever you were feeling at the beginning of the year, the end, I need some consistency and stamina, and take it to the end, because we are about to enter to halfway through the year, Chad. Oh, man, what is this table made of? Anyways, but I love you. I'm excited. It's going to be good. I got a hammer next, so thank God I didn't. No, okay, see, this could be dangerous. I'm just ready. Are you ready, Chad? Are you ready? It's gonna Powell. This is the day. Okay, I'm leaving. I'm gonna save. I'm gonna woosah my energy out of here, horn.